Hey everyone, welcome to today's video where we're gonna continue to talk about hims&hers stock. Since I last covered this stock, the Q2 earnings has been released, and for the first time in 2 or 3 years, they have actually a regression in revenue growth quarter over quarter. But that's not a big problem for me at all. Remember that I'm comparing hims&hers in a way to the journey of Netflix over the past decade and a half. And if you go back and look at Netflix revenue growth every single quarter, there has been multiple occasions in which the revenue has actually reduced quarter over quarter. It's just like normal business. You cannot expect to have year in, year out revenue growth every single quarter. So that's not possible. That's not realistic at all. The more important story here is, why is the revenue decreasing, and do you see a potential future in which the revenue is going to continue to go up? Maybe not at the same pace as, let's say, for example, for hims&hers, as you can see on the graphs here, the revenue doubled from Q1 of 2023 at 190 million to Q3 of 2024. So in less than a year and a half, or around a year and a half, they doubled their revenue on a quarterly run rate. Now, that's going to be more difficult as the company grows. That's just normal business. But I still see like multiple years, potentially decade of revenue growth on a longer term for hims&hers. And also, if they can make profits on those revenue basis, that's going to be a huge win in my opinion. This is why I think that this company has huge potential. It's not cheap actually currently. I would say that it's not the cheapest valuation, but also it's not like the likes of Palantir, for example, like hundreds of times of price to earnings ratio. My whole thesis on hims&hers is what they are offering right now, and more importantly, what they'll offer in like 2 years from now, in 5 years from now. I see hims&hers not as the finished product right now. I do believe that this company will, within time, like within every single quarter or every single year, add additional service, additional verticals. Imagine a future, because there's a lot of talk right now. Hims is gonna start to look at lab testing, maybe in-home analysis of your indicators, of your health indicators, like blood sugar, maybe starting with the easiest ones, like blood sugar, your vitamin D level, or whatever it might be. But in the long term, imagine the longevity as a solution. Imagine a future in which you're not a customer for Hims once you become ill. You're actually a customer before you become ill, and you prevent diseases. Imagine you're in your mid-30s or late 30s, and you have genetics in your family that makes you prone to risk of diabetes. You might be worried about this because some of the elders in your family is having diabetes currently. So Hims might have a solution to this, in which you're already screening yourself already in your mid 30s maybe, or early 30s, and see, okay, you're now risking early onset on diabetes, at least with the stuff that you can prevent, i.e. training and what you are actually eating. And that way Hims could help you to direct your eating habits and training habits in the right direction with the screenings, with the data that you give them, but the analysis that you have done at home. And that way you save a bunch of money, and also just your mental and physical well-being of postponing your onset of potentially diabetes by X amount of time. That is like the potential win-win situation for Hims and the customer. So I see there's by no way Hims is not the final finished product. I think there's a whole lot of alternative solutions that Hims will be offering their customers. So together with that, and also being the new face of healthcare for the future going into the 2030s, I think Hims has a huge opportunity here. We might see a few years of a slow growth. So for example, my subscriber number that you are seeing right now, and we can also see on the graph, maybe it's a bit more easier. It's all based on the solutions that Hims offering right now. So in my opinion, this is highly conservative in one way, because as you go longer and longer in the future, maybe by end of Q4 of 2026 or Q4 of 2027, Hims will then have so many more solutions, so the subscriber base will increase just by the sheer amount of solutions that they are offering to the customers. In addition to that, they are expanding in Canada, in Europe. They're already offering multiple solutions in Europe, and they bought a company in, I believe, Zava or something like that in Europe already, just a few months back. So there's a lot of opportunity and growth to be happening. And looking at the valuation of the company currently, I believe like 11 billion or so market cap. And just looking at the fundamentals, like before we, ride away in the future with future expectations. So 550 million roughly in revenue in Q2, And then looking at the operating expenses, you can see that the biggest one in the operating expenses is the marketing, 217 million. Then operation and support, 66. Technology development, almost 40 million, 38 million. And then general and administrative, 67 million. My thesis is that as the company grows, as the revenue goes up, the marketing as percentage of the revenue will be going down. In fact, I have a graph here that shows you how much. You can see that currently in Q1 of 2023, it was like between 50 to 60%. The marketing as fraction of the revenue. As time goes on, this will go down and it's already trending down. I mean, the best one was already in Q1 of 2025, which was below 40%, and the Q2 number was roughly 40%. And not only will the marketing as fraction of revenue go down, all the other segments of the operating expenditure, so for example, operation and support, technology development, and general and administrative will also hopefully continue to scale down a little bit as the revenue goes up, and we see some kind of scalability in the company. You can also see on this other graph, the total operating expenditure in the yellow border is gonna go down to, getting close to 50% in my opinion, maybe in 2028 or early 2029. That means that the margins will increase. So what kind of profitability are we looking at, let's say in end of 2024? I mean, based on stock-based compensation that is continue at the same kind of pace, slightly going down a little bit. I mean, it's been usually around 6 to 7%. Let's say that we are expecting 4 to 5% by end of 2027. I believe that the adjusted EBITDA as fraction of revenue will be around 20-21%. And maybe also the net income as fraction of revenue will be around 16 to 17%. So what do I expect in terms of net income by end of 2027? Well, I say that HIMS can earn around 170 to 200 million every single quarter. That's like 700 to 800 million in earnings every single year on annual run rate by 2027, late 2027. And that is including still a huge chunk of marketing, like 370 million roughly, according to my models. I believe that there's a scenario in which this marketing number will be scaled down substantially, and that number is going to go down potentially much more due to the simple fact that people are spreading hims and hers. Like if everyone is so happy with their offering, with their solution as customers, so we are starting to see like HIMS becoming a household name, and they don't need to spend as much on marketing. Like anyone that thinks about telehealth will think about hims and hers, the same way that everyone thinks about streaming. I mean, most people think about Netflix, right? Then maybe you think about Amazon Prime or HBO Max or whatever it might be, but most of us think about Netflix in streaming of movies and series. When it comes to music, it's obviously Spotify. Then you have like Apple or whatever, Tidal or what it was. So I believe HIMS will also enjoy that kind of benefit as being maybe not the first mover, but at least the winner in that scenario, the dominant player in that market. So as I mentioned previously, all of those numbers are based on HIMS solutions currently, and I genuinely believe that we are just in the beginning of this journey. I think that the healthcare service and healthcare sector is in for a huge disruptive change, and right now that the main disruptor in that market will be looking like to be hims and hers. So I wouldn't be worried at all. I mean, even currently the valuation is not like pie in the sky. Sure, it's currently like around 60 to 65 price to earnings ratio. It's not like super low, but this is for a company that is like used to grow like 60-70% revenue every single year, might go down to 30%, 25 and 2026. But again, I definitely see that uptake in that revenue acceleration a couple of years from now, because by that time there's going to be so many more. Like in 2 years time, if you go on this same page here on Hims and Hers webpage, I wouldn't be surprised if there's at least 2 or 3 more different alternative segments with tens of millions of, maybe not tens of millions, but at least like hundreds of thousands or millions of new customers enjoying combined all of these different solutions that HIMS can offer. And the long term, like 2035 and so on, I think there's going to be a huge market into like home analysis, home diagnostics, and how you communicate that kind of diagnostics with your professional medical service. And I think HIMS is going to be that portal of like the actual the pills, the drugs, the actual connection from you to your healthcare service to the doctors, and as well as some minor testing at home. Like how much of tests you can do at home is to be seen, but I definitely think that the healthcare market is going to move in a direction in which a lot of the basic tests will be done at home, and that's going to definitely help companies like Hims and Hers. So in any case, that was my few cents on Hims and Hers currently. I still think that this is a huge company in the future. I understand the scary thing about Novo Nordisk and all that kind of stuff. But even in the worst case scenario, I still think that this company is here to stay due to the simple fact that they are offering so many different solutions. So weight loss, I mean, I started to add it on the, on the earnings revenue page here. You can see roughly my estimations for Q3 and Q4. And I still think going forwards, the weight loss is going to be important, but it's going to be just one important leg for Hims and Hers amongst many and potentially 10 different segments as we go into 2030. So anyways, thanks for your time. Please like and subscribe, and share your ideas and thoughts about Hims and Hers stock in the comment section. So see you in the next one.